According to tanker tracker Petro-Logistics, the 10 OPEC nations who are bound by the OPEC Plus output agreement have raised their combined crude oil exports by more over 1 million barrels per day, BPD, so far in July. According to a tweet from Petro-Logistics, all OPEC crude oil shipments have grown by 500,000 BPD so far this month. This includes exports from Iran, Venezuela, and Libya, who are excluded from the OPEC Plus agreement. Nonetheless, the OPEC Plus Accord members' OPEC shipments have increased by more than 1 million barrels per day due to a spike in Saudi Arabia's oil exports. However, according to Petro-Logistics, Saudi crude oil exports are anticipated to decline in the second half of July. According to the tanker tracking company, OPEC's oil exports have increased by 1 million barrels per day on Monday. This month, the OPEC Plus group began to reduce its output curbs by 350 barrels per day. The OPEC Plus group decided to progressively bring back around 1 million barrels per day to the market between July and September during the ministerial meeting in early June. The combined oil production of OPEC Plus is expected to increase by 350,000 barrels per day in July and August, and by over 400,000 barrels per day in September. Over the following 3 months, Saudi Arabia will also progressively reduce its extra unilateral reduction of 1 million barrels per day. The country will start by increasing output by 250,000 barrels per month in July and August. By July, OPEC Plus is predicted to re-enter the market at a rate of up to 2.1 million barrels per day. With vaccination programs accelerating and people starting to travel more, the decision made in early June indicated the OPEC Plus alliance's officials' confidence that the market could handle that much supply. By the conclusion of this year's fourth quarter, OPEC Plus and all analysts anticipate that global oil consumption will have recovered significantly in the second half of 2024 and will be almost back to pre-crisis levels. As previously agreed upon in early June, OPEC has been increasing its oil production in July. However, as the monthly Reuters poll revealed on Monday, significant gains from top producers Saudi Arabia and Iraq were somewhat offset by decreased output in Nigeria, Angola, and Iran, which led to a smaller than expected rise in the cartel's supply. According to OPEC insiders, sources at oil companies and consultancies, and tanker tracking data, the 13 members of OPEC produced 25.52 million barrels per day, BPD, this month, up 280,000 BPD from June. The biggest suppliers of oil for the cartel, Saudi Arabia and Iraq, considerably raised their output in May, while Nigeria, Angola, and Iran saw a decline in supply, according to the poll. OPEC's portion of the 350,000 BPD increase in OPEC Plus output in July was 277,000 BPD, as per the terms of the OPEC Plus agreement. Furthermore, over the course of the upcoming few months, Saudi Arabia is lowering its extra unilateral reduction of 1 million barrels per day, starting with monthly production rises of 250,000 barrels per day in July and August. It should come as no surprise that Saudi Arabia had the largest increase in oil production among OPEC members, with a 340,000 BPD increase in crude output, according to a Reuters survey. According to the poll, Iraq, which is the second largest producer in OPEC after Saudi Arabia, increased output by 70,000 barrels per day and exceeded its quota. After a force majeure on oil terminal loadings at the Hariga port was lifted at the end of June, Libya increased its production in May compared to June. Venezuela and Iran are not subject to the OPEC Plus cutbacks, nor is Libya. Iran's supply to the market decreased in July as a result of decreased demand from its main client, China, according to a Reuters study. It is generally anticipated that the OPEC Plus group, which is gathering on Tuesday, would affirm its July to September agreement to reduce the oil output curbs by the scheduled 840,000 BPD in September. This week saw a significant increase in the price of crude oil as OPEC Plus indicated that it was becoming increasingly confident about the supply and demand balance and that it intended to keep raising production. According to Russia's Alexander Novak and Saudi Arabia's Abdulaziz bin Salman, the demand for crude oil has shown clear signs of improvement, according to Bloomberg. Even though most analysts seem to assume that considerably more crude oil will come from Iran in the coming month after U.S. sanctions are repealed, the improvement in demand is what is holding prices higher. As of right now, there's some optimism that growing demand will be able to take in an extra 2 million barrels per day from Iran, should that happen, according to overseas Chinese Banking Corporation economist Howie Li, who spoke to Bloomberg. The recovery in global consumption has been driven by demand from the United States. The Financial Times stated that investors' worries about growing inflation that could impede economic recovery have grown as a result of the recent sharp increase in oil prices. However, bin Salman, the Saudi Arabian minister, was cited as downplaying the significance of inflation. The official told reporters following the OPEC Plus summit, as reported by the FT, I'm not the right economist to talk to about inflation. Talk to Goldman Sachs, and hopefully they'll tell you it's a minuscule impact. But rising costs can start to affect demand. The Financial Times report states that OPEC analysts anticipate a sharp drop in global oil inventories, which could lead the group to increase production sooner than anticipated. The market is currently dealing with April 2020's exact opposite problem. Producers now face an equally difficult challenge to restore adequate supply to meet the rapidly increasing oil demand, as opposed to a downward spiraling demand shock, Rystad energy analyst Louise Dixon told the Financial Times. Oil prices increased early on Tuesday, ahead of and during the OPEC Plus monthly meeting, following indications from the alliance's Joint Ministerial Monitoring Committee, JMMC, that the plans to increase July oil production by 840,000 barrels per day would remain unchanged. Brent crude was trading at $86 per barrel after breaking through the $84 barrier earlier in the day, while WTI crude was up 3.36% at $83. The JMMC meeting also sent a message that OPEC and OPEC Plus believe the world oil market is doing better than it was earlier in the year and that they are closely watching the current negotiations over the Iran nuclear deal, which may soon lead to Iran's oil being able to be sold again on the open market. The oil predictions are essentially unchanged from our previous meeting. An increase of 6.6% is anticipated in demand, with growth of 6 million barrels per day to around 96.5 million barrels per day on average for the year. At the JMMC conference, which came before the main OPEC Plus meeting, OPEC Secretary General Mohammed Barkindo stated, "As with the economy, the market outlook for later this year looks especially promising." In the fourth quarter, Barkindo continued, "We actually expect that demand will exceed 99 million barrels per day, which would put us back in the range of pre-pandemic levels. We expect the expected return of Iranian production and exports to transpire in a transparent and orderly manner, upholding the relative stability that we have diligently labored to establish since April of last year," stated Barkindo. The JMMC's co-chair, Russian Deputy Prime Minister Alexander Novak, emphasized the recent improvements in the world oil market while pointing out that some risk factors still exist. Russian news outlet TASS was informed by OPEC sources that there will probably be nothing to revise.